Hello and welcome back to Coin Matters channel. Ripple and XRP are the most widely used cryptocurrencies and financial instruments, thus we'll be discussing them today. So, without further ado, I'd like to direct your attention to a tweet by one John Eden. And as we can see, I haven't wavered from my earlier assertion that the documents will cause even a Ripple hater to wonder why Hinman insisted on giving the speech, given that they reveal the motivations and conflicts of interest of influential people. Before I go any further, I'd like to get a general sense of how everyone feels about today's potential significance to the crypto, Ripple, and XRP communities. Many individuals, in my opinion, have become excessively bullish thus far on this day, and we all know what happens when that happens. Personally, I enjoy going against the grain. Obviously, we can't predict the future. It's possible that today will be a significant day. However, the Hinman papers are being closely examined. I could care less about the SEC and Ripple case, to be honest. You know, win, lose, or draw, it doesn't matter. For the time being, I couldn't care less. These Hinman records are crucial to me. When we finally acquire them, I believe the general public will be pleasantly delighted. He is, in fact, referring to Jumble Inc.'s own Brad Garlinghouse. He is adding him and addressing him directly to Brad Garlinghouse. Do you have any predictions before the release of the Hinman documents? Ripple's efforts to secure this vital information for the public are much appreciated. Brad Garlinghouse has responded, saying, "Wish I could go in depth now, but we've waited this long, 18 plus months. My intention is to tread lightly. Let it suffice to say that I, along with Ster Alterati, think they were definitely worth the wait. And yeah, I do think the wait was worthwhile. For a long time now, we have heard Congress and all these key people say, you know, the SEC is doing a horrible job, and I think the Hinman records can set things in motion so that the SEC actually has to answer for their actions. And we're just sitting back here wondering, what the heck is going to happen? Is it going to be all talk, or are there going to be some concrete steps taken? Right? Because it's one thing to say one thing and quite another to actually put those words into action. What I want to know is what's going to happen from here on out, and the Hinman documents seem to be the wheels that will be put on the car to make it drive. I agree that the Hinman documents have the potential to shock the public. We already knew that they would likely shock people because Brad Garlinghouse said so. We have no idea when they'll be out, but we'll take tomorrow, today, or whenever you can get it out. But I do believe it will be worth the wait. As for the SEC's onslaught on the sector as a whole, I believe the Hinman documents are incredibly damaging. And this might be a huge issue for the XRP army and the Ripple v. SEC case, in my opinion. Let's also consider Gary Gensler as we discuss the Hinman files. Here's another video of Gary Gensler from 2018 discussing how he groups cryptocurrencies like Bitcoin, Ethereum, and Bitcoin Cash. How come I chose those 4 examples? If Ethereum 2022 alters its consensus method, will it make it a security in his opinion? The other major issue is that he consistently claims that tokens like Litecoin, Bitcoin Cash, and others are securities. What do you think the real difference is? In 2018, Chair Gensler represented Bitcoin, Ether, Litecoin, and Bitcoin Cash at a conference held by Bloomberg in New York City. There's no point in mentioning those 4, they're not investments. I wonder what Goldman Gary will have to say about this incredibly insightful rhetorical question. And pay great attention to this. Bitcoin, Ether, Litecoin, and Bitcoin Cash account for over 70% of the market cap. How come I chose those 4 examples? This is not a security. What transpired, then? I mean, for my own part, I really am curious. We checked out Patrick McHenry, too. It should work now. Chairman Gensler, please recall last month's question so that I may respond appropriately. And then, here's another one I found in the video that you should see. In April of 2019, Gary Gensler, the governor and chairman of the SEC, was pushing algo in one of his global economics and management seminars at MIT. According to SEC records, an investment in Algorand made during his promotion period would have resulted in a loss of 90% as of the present time. Kim K. was fined $250,000 by the SEC for promoting the EMAX security without first having it registered. The government is accusing Binance and its US and UK affiliates of selling securities without proper registration. One of them is Algorand. How about a lawsuit against the SEC? Gary Gensler, governor's chairman, was accused of pushing an unapproved security. Given the incriminating proof here, as well as many of the other films of Gary Gensler continually pushing Algorand, it's clear that the SEC enjoys digging up 5-year-old chat logs and trying to make it stick. If the US SEC chairman had actively promoted an unregistered security, we would have grounds to sue him. Due to Gary's high profile, I see no reason why this shouldn't be permanent. Please don't tell me that Gary isn't a well-known figure in society. The SEC chief executive also began billing Twitter accounts for promoting stock memes. This is where the documents may be seen. These are the laws of the United States, and no one is above the law. Unless, of course, we're dealing with a case of double standards. You weigh in, Warren Davidson. If this is a legal matter, I suggest that everybody who bought Algorand between April 2019 and now file a lawsuit against the head of the U.S. Securities and Exchange Commission. So, it's not easy to govern. A service like Uber or Lyft could theoretically be built right now on a blockchain. Perhaps in another 5 years. The functionality is there. I collaborate with Sylvia Macaulay's Algorand, a Turing Award recipient at MIT. Sylvia possesses cutting-edge, effective technologies. Building Uber into it would be possible. So, who would be responsible for releasing new software versions? There are plenty of videos like this one with Gary Gensler discussing Algorand and other tokens. You have to admit it's funny in a way. This is an example of double standards. Why do they keep going after crypto, though? Well, we'll discuss that right now. To begin, I'd like to comment on today's activities of Warren Davidson. It's time for the SEC to make some serious changes, which means removing Gary Gensler as chairman. Look at this. Look at this. The Republican leadership in the House has presented legislation to oust SEC Chair Gary Gensler and reorganize the agency. The legislation would create a 6th commissioner position and limit the representation of any one political party to no more than 3 commissioners. My impression is that this is quite significant. The SEC Stabilization Act has finally been passed. This, of course, must be approved. Keep it in mind. And that's the whole explanation. Thus, Gary Gensler is removed as chair. 6 commissioners are responsible for all regulations, enforcement, and investigations, which establishes a routine. I appreciate it. Thanks to the Republican Majority Whip for his leadership on this bill. Here's something else you should see. You're stuck with the ancient building. This is the revised framework for the act. Supersized. In fact, I agree with this completely. This is fantastic, in my opinion. It makes possible, in a sense, a decentralized organization. I am overjoyed at this news. The crucial question is whether or not it is also passed here if it is eventually approved. The SEC Stabilization Act, my proposal to reorganize the agency and remove Gary Gensler from his position, made headlines today. The United States financial system needs safeguards against autocratic chairmen like the current one. It's time for serious reform, and the SEC chairman, Gary Gensler, should resign his position. This is the declaration. I just read the complete statement, and it looks like this. Tom Emmer has apparently joined me in this vital effort to safeguard our markets. Investors and businesses in the United States demand transparent and consistent regulation, not political gamesmanship. It will be logical to enact the SEC Stabilization Act. I had to click it quickly, but these adjustments make sense and will help ensure that the Securities and Exchange Commission puts the interests of the investors it is tasked with protecting ahead of the whims of its reckless chair. And yes, I really believe this is fantastic. This is the best possible situation for us. But the main concern is, and this is a concern for digital asset investors as well, is whether or not this is actually that fantastic. Republican House Minority Whip Warren Davidson. But if it doesn't pass, will you pledge to defund the SEC anyway? The Democrats aren't necessary for that. No more empty gestures will do. Time to show no mercy, just like the bad guys. Otherwise, this is all political posturing. And yeah, this is precisely what I've been describing. Actions, as they say, speak louder than words. There needs to be movement in this regard. We can't just sit back and wait for Congress to act while they keep promising, hey, we're going to do this, over and over again. I understand, that much is true. These bills are awesome, like. Or, perhaps I should rephrase that, these acts are fantastic, but they must be passed, and if they aren't, what happens then? Right. Will this just disappear and disappear under the bridge? You know, like, what's going to occur? And right now, it appears like there's a lot of pressure on the SEC, which is something I really like to see, if we take a step back and look at what's been occurring in the last few of months. Will it even make a difference, though? The Hinman papers strike me as the kind of material that could serve as a cornerstone for the whole affair. I believe the Hinman paperwork might really start things going. I agree that this is a potential red flag. This, in my opinion, is a really significant development. A lot of people, I know, have been acting like the Hinman documents don't warrant any concern. It's a big, fat, meaningless burger. The problem is that we have been waiting for the Hinman paperwork for almost a year. I mean, this really matters. That matters a lot. We're holding out for the day that these become available. As soon as they are made public, I believe the conversation surrounding this industry as a whole, and the Securities and Exchange Commission in particular, will undergo a dramatic shift. And this is just to be safe. What's crazy about it all is that you can see why they're attacking crypto so aggressively. XRP___gold tweeted this to Twitter yesterday, or maybe it was 2 days ago. Depositors left U.S. banks in record numbers, with $472 billion being withdrawn in only 3 months. And you get the significance of this, right? Their goal is to safeguard financial institutions. They are aware of the destination of this cash. They understand exactly where this funding is going. Investing options include equities, cryptocurrencies, and money market accounts. Right. Which is money market funds, which we've covered. Money market funds total around $5.8 trillion. You may make a lot of cash selling those. However, funds are rapidly leaving the financial system. That's why they're making an effort to slow things down. Since a lot of money is expected to come into crypto over the next couple of months, they are also attempting to halt developments within the crypto space. That's what I think, anyway. I've gone on and on about this. In fact, I anticipate 2023 to be a very fruitful year for the cryptocurrency market. And if we take a closer look at the current state of crypto and the ongoing regulatory battle, I believe that the future holds some really exciting developments. In my opinion, this is a landmark case as well. I've gone into detail numerous times. I hate to sound like a broken record, but this case really is something special. Right? Because of the growth of the digital economy, this event will be recorded in his crypto-related history books. Before our very eyes, the foundations for the digital age of finance are being laid. And it's not something that's going to disappear on its own. It's great if the authorities want to try to halt or slow this down, it will be here no matter what. They're capable of it. On the other hand, did you know this? In 5, 10, 20, or 50 years, it will still be here. And I absolutely believe that this is what the digital rails of tomorrow's financial sector will be constructed upon. And so, we examine that. This naturally brings me to my next topic, Operation Choke Point 2.0, which I covered not too long ago in a video. The consequences of Operation Choke Point 2.0 can be seen in the record-breaking highs in decentralized exchange volumes, tether volumes, and near-record high offshore volumes. Ultimately, the U.S. government will have less control since capital and activity will simply transfer overseas and onto chains. And this is the reality, you know. I realize this may seem like a broken record, but it bears repeating. If the United States continues to fall behind as it has, what will be done? On what exactly are they going to rely? Will they rely on the standard financial system? Will they depend on a CBDC in the United States? What do you think is going to happen next? Is this an attempt to hand complete control over to Wall Street? As for me, absolutely, in my opinion. But I fear that strategy will backfire. I agree with the SEC's previous cases, including the Ripple case. Right. Has proven unsuccessful thus far. And I expect this trend to persist for the foreseeable future. And, of course, Tim Draper, whose identity I am confident you already guessed along with the rest of the population. Years ago, he essentially targeted Gary Gensler. It was the subject of an entire video. The video file was enormous. It rapidly spread throughout the whole crypto community. Tim Draper, is an up-and-comer in the industry. Tim Draper, a new venture capitalist who has joined Fox Business Week, seems to be advocating for crypto industry advancement. Regulatory agencies create both anxiety and opportunity. Almost 80 years have passed since the Howey test, and it is now irrelevant to cryptography. In my opinion, a different set of people should be responsible for crypto regulation. It's time to rein in our overzealous regulators, in my opinion. It's true that Gensler is bad for the country. And, you have to admit, it's really funny. Cryptocurrency is the future, but many people still don't think it's all that important if it's stored abroad. That seems to be the root cause of the current regulatory conflict. This is why the crypto wars are erupting, especially in the United States. And it's permanent, you can count on it. I repeat, this is where things are headed. I've discussed a lot about Web3, the fourth industrial revolution, and the development of finance in general on this channel. This is happening right now, and it's getting a lot of attention. So, in my opinion, this is an exciting development to keep an eye on. Perhaps today is a significant day. That's what I'm thinking. I mean, who knows? I'm just going to relax and watch what develops. However, I believe these Hinman papers are an essential part of this argument. I predict that they will achieve great success, and I believe that everyone should keep an eye on the events of today. Don't get your hopes up, once more. Don't put all your eggs in one basket on a single date. Many of these dates have been previously analyzed, and we know how they relate to the markets. Personally, I've learned to hold off on being overly enthusiastic about a date unless there's some real substance there. So, you should hold your breath until there's some real meat on the bones. Finally, I wish you all a good time watching this video. Please like and subscribe my channel. See you in the next video. Bye.